Welcome back. In this section, we'll explore the opportunities for integrating DeFi with traditional finance. By the end of this lecture, you'll understand how DeFi can complement traditional financial systems, the potential benefits, and some real-world examples of the successful integrations that have already taken place. Integrating DeFi with traditional finance can bring numerous benefits, including enhanced efficiency, increased access to financial services, and the potential for innovation. Traditional finance can leverage DeFi's transparency, automation, and decentralization to improve existing systems. Here are some key benefits of integrating DeFi with traditional finance. Efficiency and cost reduction. DeFi's use of smart contracts can automate many financial processes, reducing the need for intermediaries and cutting operational costs. In traditional finance, this is akin to the automation of back-office processes, which reduces manual errors and speeds up transaction times. Increased access and financial inclusion. DeFi provides access to financial services for individuals and businesses that are underserved by traditional financial institutions. This can be compared to microfinance initiatives in traditional finance that aim to provide banking services to low-income individuals. And finally, transparency and security. DeFi's transparent blockchain technology can enhance the transparency and security of financial transactions. Here are some potential use cases for integrating DeFi with traditional finance. Firstly, there's cross-border payments. DeFi can simplify and reduce the cost of cross-border payments by using stablecoins and blockchain technology. In traditional finance, cross-border payments often involve multiple intermediaries and high fees. DeFi can streamline this process, making it faster and cheaper. Then we have lending and borrowing. Traditional financial institutions can use DeFi protocols to offer more competitive lending and borrowing rates. By integrating DeFi lending platforms, banks can provide their customers with better rates and more efficient services. And then there's asset tokenization. Traditional assets like real estate, stocks, and bonds can be tokenized and traded on DeFi platforms. This process, known as asset tokenization, can increase liquidity and make it easier to trade and manage these assets. Now let's look at some real-world examples where DeFi and traditional finance have successfully integrated. Let's start with JP Morgan. A global leader in financial services, JP Morgan has been at the forefront of blockchain adoption among traditional financial institutions. Through its Onyx division, JP Morgan has developed and deployed the JPM coin, which is a stablecoin to facilitate instant payments. They have also developed a peer-to-peer network that uses blockchain to enhance information sharing and speed up cross-border payments. This not only streamlines operations, but also significantly reduces transaction costs and settlement times. They are also one of the major players making a lot of noise about tokenization recently. Visa, a giant in the payments industry, has also ventured into the DeFi realm by integrating stablecoin transactions into its network. Visa has partnered with Circle, the company behind the USDC stablecoin, to allow transactions to be settled in USDC. This development enables faster and cheaper cross-border payments, leveraging the stability and transparency of blockchain technology. Visa's involvement demonstrates how traditional payment systems can benefit from the efficiencies offered by DeFi. MakerDAO, a DeFi protocol, has partnered with Centrifuge to bring real-world assets onto the blockchain. This allows traditional assets like invoices and real estate to be used as collateral in DeFi, bridging the gap between DeFi and traditional finance. Now, to dive deeper into the Centrifuge and MakerDAO integration, Centrifuge tokenizes real-world assets like invoices and uses them as collateral on MakerDAO to mint DAI, a stablecoin. This process allows businesses to access liquidity quickly and efficiently. It's similar to traditional asset-backed lending, where assets are used as collateral for loans, but with the added benefit of blockchain technology, such as increased transparency and reduced processing times. Compound, another leading DeFi protocol, offers Compound Treasury, a service that allows businesses to earn a fixed rate on their USD holdings by converting them into USDC and lending them out on the Compound platform. This integration provides traditional businesses with access to DeFi's higher yield opportunities. While there are many opportunities for integration, there are also challenges to consider. Firstly, regulatory compliance. Ensuring compliance with existing regulations and navigating new regulatory frameworks can be complex. Both DeFi and traditional finance institutions need to work together to address these challenges. There's also security concerns, so integrating traditional finance with DeFi requires robust security measures to protect against fraud and cyber attacks. And then finally, there's the technology integration. Seamlessly integrating blockchain technology with the existing financial systems can be technically challenging and does require significant investment. Looking ahead, the integration of DeFi and traditional finance is likely to become more prevalent. As regulatory frameworks evolve and technology advances, we can expect to see more innovative solutions that combine the strengths of both systems. In summary, integrating DeFi with traditional finance offers numerous benefits, including increased efficiency, access, and transparency. Real-world examples like JP Morgan's Onyx, the partnership between MakerDAO and Centrifuge, and Compound Treasury demonstrate the potential of such integrations. While challenges remain, the future looks promising as both sectors continue to evolve and collaborate. In the next section, we'll explore future trends and innovations in DeFi, providing insights into what lies ahead. I'll see you there.